window.
Hello traders, Gary Wagner with the Gold Forecast here. It is approximately 10:15 a.m. in Honolulu, Hawaii. The markets have closed for the week. It is Friday, the 27th day of May, and this is the Daily Report, our weekend review. And oh, what a week we have had. Gold is finishing incredibly strong, closing up today about $17, closing at $1536.09, as you can see on the print board. We're looking at our daily chart. Of course, on our daily chart, we calculate not only our Elliott wave, but our channel lines. And you can see that this market, I have kind of compressed it so we can see the incredible move that we have seen of recent, and you can see after this retracement right in here, we are off and running to the races right now. My belief is that we are in wave 5 currently of a major wave 5. So in other words, this could in fact be the last hurrah, but I believe the last hurrah will take us to new record tops. Now, I want to say that with a caveat, because what I mean by the last hurrah is once we complete a major 5, we will go into what is called a corrective phase. The corrective phase is different than a corrective set of waves in that during the phase, rather than having a simple count, meaning a ABC count on the way downs, in other words, what you get when you have your standard impulse. Your standard impulse is a 1, 2, 3, 4, and then 5, and then you go into an ABC correction like that. When you go into a impulse phase, you get something like this. When you go into a corrective phase, you get a 1, 2, 3, 4, and 5. You'll get a 5 count down and then a 3 count up. And that would complete, of course, your corrective phase. The corrective phase, just like the impulse phase, is going to be composed of 5 waves, but they're going to be reversed. So when we hit that, we're going to have a different strategy if, in fact, we get confirmation that we have changed from a impulse to a corrective phase, not wave. Also, realize that it is my belief that this bull run is far from over, and that after that corrective phase, we will go into yet another long impulse phase, and that impulse phase is probably what over the next year, year and a half, will take this market well above $1,700 per ounce. Traders, we are looking at our weekly straight candlestick charts, not in Henkin format, it is in standard candlestick format. Reason for us looking at it this morning is what I found that was interesting when I did my technical analysis and studies is that when we look at this particular formation that we have in here, if you notice, there's that one pattern I look for as an indication that the market has in fact gone to a bottom formation. And that indication that I look for is that 3 river morning star variation. That morning star variation is our one candle down, that long down day, our star in the center, and then our up candle or our white candle right in here. As you can see, over these last 2 weeks, you combine those, we have a large move to the upside. You also see the consolidating candle, that's that doji right here in the center. And what that is telling me is that we can categorically at this point look at this marketplace and say, yes, we have found our bottom, and in fact, that bottom is going to be our support, and we will most certainly see these markets head towards new highs in the next weeks to come. You know, traders, some of the worksheets that I do, I will kind of set aside or put aside, and then I'll take them out a little bit later and see how everything looks in hindsight. If you recall, this is the correction that we were weathering. This is a 620-minute chart. It is in standard candlestick format. And what we were looking at when we looked at this was this basic pennant formation. Our belief was that the correction was somewhat of a hybrid, meaning that we weren't getting our straight ABC correction, but rather a 1, 2, 3, 4, 5. And I think that when we look at this now in hindsight, we can absolutely see that that seems to be how this market played out. Our 1, here's 2, 3, of course 4 came a little bit over. We got our 5. 5 is where we hit our apex, and then of course, according to Elliott Wave, once you hit that 5, you go into what's called your thrust line, and there's our thrust line. As you can see, this market has taken off quite eloquently. It has taken off quite nicely, and now the question is going to be, where are strategic points that we will look to find some sort of resistance? As you can see, I have put up on the board various levels, and this market has pretty much taken out these levels. But as you can see, this is this top right here, the top of 2 here. It's a zero line for this particular retracement because that retracement's only being drawn from the bottom of this 1 and to the top of 2. And you can see that without a doubt, we absolutely found resistance right in this area. We can also say with some certainty at this point that that resistance was taken out. As you can see, we had this major move above that, and so you can see that we really have gone beyond that and taken that out. My sentiment is therefore that the next real area that we're going to look for is about 1550. 1549.97 is a 76% retracement of this entire move here. And so we'll see how it reacts here. Does that mean that we'll find resistance in that area? Well, not necessarily so, but what that does mean is that is an area that we absolutely want to look at and see what happens. 1, assuming the market continues to trade higher, which I adamantly believe it will. And number 2, once it reaches that point, will it stall? Will we find a little bit of resistance as we did right in here and then get our breakout above it? Or will it just kind of barrel all the way through and just kind of cut through it like a hot knife through butter? Well, that's something that we'll have to see. Traders, I think we've had a great couple of weeks here in the gold forecast. I'm so pleased at the way the market's been tracking and the fact that we have had somewhat of a handle on it. We have seen this market run through some cycles, and I believe that those cycles, using Fibonacci, using Elliott Wave, using candlesticks, when you combine the 3, you get a really good sense for where the market's going to go in terms of market cycles and market timing itself. As you know, I spoke about the fact that I'm going to offer those gold forecast subscribers that want to try out the silver forecast a special offer. In the email today, you'll see a special link. What it will allow you to do is to try the silver forecast. The first month is $49. All the subsequent months are going to be members pricing, which is $149 a month. $300 a quarter. I don't know how I'll set it up yet, but you will get member pricing after the trial is over. So if silver is something that you considered in terms of adding to your portfolio, and you feel that the work that we do here at the gold forecast and the silver forecast is such that it would be of benefit or value for you to add that, I am making an offer so that you can try it out very inexpensively and determine over the next month for yourself whether or not adding this will add to your bottom line and your profit potential. That's really what counts. This has been Gary Wagner wishing you, as always, good trading. Have a great Memorial Day weekend for those of you on the mainland. Peace on earth, goodwill towards men. I know it's a saying that's used without too much sentiment, but believe me, when I say it, it's heartfelt. Again, Gary Wagner wishing you, as always, good trading, and we'll talk to you after the Memorial Day holiday. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange